urbanfoodalliance.org. This is a food bank. We just help people in the community whoever going through any food insecurity or any type of financial stress. We help them for the financial stress. We help them educating in jobs, job training, and finding them a job so they can get off from our program. So when it comes to money and stock market, everything I am sharing is all my opinion only. As a financial advisor, I do ask everybody, please do your own due diligence and do not trust other people's opinion. Your money, your risk, your responsibility. What happened to last week? I think from our friend Jay, we heard that the rate cards would not be one thing he said. You can say that rate cards would not be appropriate. We do not know when. He did not give a clear signal, but one of the thing that market is thinking next meetings by the time end of the year we might see some rate cards, but we do not know it. But he was not very clear. Hence, market did not know what to do. We do think that at some point market is going to cool down. But the other thing he did make it clear that Fed is looking towards that 2% target, that inflation, bring inflation back to 2%. In order for that to bring it down 2%, are they keep going to go higher, or they'll say, okay, let's pause. But if anybody have been following what's happening last 10 and consecutive rate is increase is happening. So if you start looking at the market currently, how market is sentiment, market is thinking, excuse me, um, this coming year, September time, that they will be start coming down. Instead of pausing, it's going to do rate cut. From September, by the end of the year, that market thinks is going to come below 5%. Each quarter, September, November, January, December, you can see that market is coming towards that. Now, whatever you do, just based on your existing account size, portfolio size, and some of you heard from Jay and others who is experienced throughout these sessions that how they are trading your money, your time, and just be careful. Now, next things you are going to see that this coming year, that what the bank is going through. Actually, GDP, not this. That's I want to come back. As banking sector is going through this whole difficulties at this time currently, that what you are looking at the chart, U.S. recession time since 2000, you say that 2000 time and 2007 the financial recession happened, and then 2010 this year, this golden color 2010, the pandemic time that we go through. But around that time, the other thing what you were saying that the blue mark is that the loan, when bank is tightening the loan officers giving loan, you see that each time whenever we are going through recession, around that recession, the bank is tightening their loan lending process. Look at that and happened 2007. Very the whole financial world or banking sector got chaos. The lending was very tough. The tightening up. It happened also during the time on pandemic. It just started around March that time. But look at happen. We know that there was a lot of money got flooded in the market later on and stuff. Then came down. Boom! Now it's going higher. So as it's going higher, that we know that our banking sector is going to whole entire difficult crisis going through. So next half, this next few months, just watch what's really going to happen, and in the banking sector, financial sector, and there is whole restructure is happening. So with that, two things that we need to keep, and that on the banking sectors, you guys are going to see that as the credit market is going to be tightening up more and more, Federal Reserve is going to put more pressure to the regional banks so that they have to have more assets, which is over more than $100 billion assets they have to show in order to continue the business. And hence, there are as more pressure going to be happening to the market side. So those who is looking at overall that stock market, hey, I'm not looking at day trading, I'm looking at next 6 months or 1 year, that market is going to have some kind of the volatility is going to happen very soon. Just keep an eye on that. Okay. Next, as that we know the banking sector is getting tightened up. But before I do go, I want to make sure, do you guys have any questions or anything to add what I just shared? We're all on the same page. Yes? Cool. Next minute, what you are going to see that that unemployment, that what you're looking at, that unemployment and job openings, what's happening. When you are looking at job openings, that color is golden color or yellow color, what you are looking at, since 2021 till the April 2023. If you are paying attention last 3 months, 4 months, what happened, that job opening at some point, yes, in January we showed the huge number, yes, and then in January 23, and after that is everything coming down. As job opening is coming down, what happened, reverse of it, that unemployment or is number also is going, is a kind of divergence is going higher the other side. So we know that growth companies are getting more and more pressure in the lending side. Also, those companies who borrowed money, especially the one is not able to show the revenue number, they are paying way more interest than what they need to do in order to still focus on their growth aspects. So if that's happened, then what do you think is going to happen? Is the GDP is going what's happening going to be GDP, what's going to happen with the consumer spending, what's going to happen economic growth, and then what will happen that when Fed is going to say their target is bringing that inflation down to 2%. So with that surprise that those who is looking to have market, what is really market happening? If you guys watch that in January, I did share something like this. When we have done the session that at January time, this picture was showing totally reversed. That time we saw that communication sector, IT sector, those are the one got hit really large. And it was one of the sector that you could have think of buying and just hang on to it. Hopefully in 4 months, 6 months, a year, we said it's going to turn around. Now, if you're looking at today with the market sector, the way it got reverse shifted, look at that energy and this all downside on the left side. Now, whole picture from January till today, it just went the other way. Communication got recovered, most of its loss. IT recovered in the positive side. You see, consumer, the discretionary is positive side as of last week. So, I'm sorry, somebody has something to add?
I just said, that's all.
Yeah, exactly. This is hard now. Is this a time to have Meta sell? I own Meta and stuff. So, and now I'm looking to see maybe I'm going to cash out some of this stuff. It's time to look at something else.
The inflation you mentioned, like it's been coming down a bit, correct?
Inflation is based on the number, yes, coming down the boom bit.
But they don't just want it to go down. They want it to 2%. Go backwards of like they want it to like revert back, like not maintain to where the prices are of general things right now. They want it to like reduce those prices.
Deflation,
correct?
Right? Deflation.
Deflation. They water and power, gas, food, everything.
Yes.
Yeah. So like, has that been happening or what?
Well, it's on its way there, but it's not there yet, obviously.
Guys, don't confuse deflation with inflation, okay? It is not an antithesis. Deflation is not good. That's what happened to Japan.
Right. Then what do you call it, Yasmin, when it reverses? The prices go back to the old days.
It is a reduction in inflation, that's simply.
Okay. Right. So,
but wouldn't a reduction in inflation just like be
Means the
reducing
growth
the
is
rate
slower.
of the?
Yeah, it just means the growth is going to grow slower.
But doesn't it want to? But don't we want things to go lower in price?
Yes.
Yeah, that's what it is, Kian. Not
okay.
not reduction in growth, Ron.
yeah,
It's a reduction in price.
price, correct.
Can still have growth in the GDP, which has something to do with our consumerism, but it's the price that is causing us to have this inflation that they are worried that it will get to a point where they can't control it.
Yes.
Now,
Right.
let me add to that. The Federal Reserve are talking about 2% to bring it down to 2%.
Right, that's the norm, right.
Yeah. But there's much debate as to whether that should be the metric that they should focus on. Because to what somebody else said, I think it was when Vinny was talking, to reduce that, okay, guys, let's talk about it in simple terms. The reason we have an increase in price is because of supply and demand. People have more money in their hands, so they're buying.
Right.
And buying means demand. Demand means price goes up. That's pure economic theory, right? So what they're trying to do is reverse consumerism. And that is not good for growth. How, right? So
yeah,
why?
Makes sense.
Because why by them increasing rates, the unintended consequences is we're going to have an increase in unemployment.
Unemployment, yeah.
Yeah.
Which is an oxymoron, right?
Exactly. Like, why would they want to have more people unemployed? It's just crazy.
This has been my biggest beef because I'm thinking, come on, you idiots, do you really want us in the US to not have a job, to not pay our bills, to not pay our mortgage, and therefore have a collapse?
Yeah.
But the buggers don't understand it.
Seen what happened to last week. That yes, it's like Nasdaq. I'm surprised, with all these have good news. Earnings came up, it still ended up closing positive, which is unsurprised and also good to see that happening. As you saw that money is getting shifted. Now, what may happen next week, we do not know. S&P barely tried to closed positive, but it's not bad, almost like -1%. But what's gonna happen next week, I don't know. But this is the reason I wanted to show you guys that look, I see the shifting happens as an investor. I'm looking my portfolio. Some areas I have a good profit, and based on all these sector, the surprise really happened. I'm going to be just taking some profit and sit there and watch for next volatility. Now I'm coming back to the ChatGPT. This is like what it is. You guys, I'm going to introduce something. Some of you may have already heard about it. Some of you may not. Today I was talking to at Princeton library about the same thing about the market economy. I learned that about Auto GPT. Anybody?
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.